The bulls have collected a massive 4 major timeframes of bullish formations, with 90% of them completed with validations for upside continuation. The actual news you were waiting for as a statistical trader is within this thread, as the 12-hour timeframe volatility versus momentum has officially fired off. Welcome back to the channel on this Thursday. This is ARCa, and let's dive into ticker symbol CLNV. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol CLNV, and what you are witnessing here is the 12-hour time frame bullish engulfing down here. So we're going to go over all of these signals here because it is quite impressive what this asset has made. Okay, so let's go ahead and just view this here, okay? Okay, this formation here is what you're observing here as a bullish engulfing. Okay, so that happens when the forward green candle completely engulfs the body of the prior red one. Okay, so you can see here that the body is small. The large green candle validated that by closing this candle above and beyond, below and above the prior red body, right? So now what usually happens is that the following candle would be the validation candle for a continuation to the upside, and the 12-hour time frame has printed just that, right? And now another thing is that yes, this candle from today did end up printing red, but please notice that it did open at about 5:37 and it closed at 5:20, meaning that it is still closing at a higher valuation than the prior close, and the prior bar close was right up here at about 5:11. So there is still bull interest here. Okay, so let's go ahead and now move on to the next time frame. Check this out. Now this is the daily time frame bullish engulfing right over here. Very similar situation, bullish engulfing candle. Right, we got the two prints and the same type of print over here, printing above the closing of the prior bar. Of the yeah, so now the did I just yeah, right, and now let's go to the bi-daily time frame. Here is the bi-daily time frame with another bullish engulfing, and guess what? We got the print for the next candle here. So this is the next validation candle with an upside pivot, and it's still suggesting a continuation to the upside. The next candle will be, well, you know, as far as the strategy is concerned, an upside. Right, so now let's go to the 3-day time frame and check that out. A 3-day close just happened today at market close, and we have officially closed a bullish engulfing here. And now the last one is about to get, let's see, actually the weekly right here, right over here. This is about to happen in about 17 hours and 56 minutes, aka tomorrow being Friday, market close. Huge bullish engulfing here on a weekly time frame, guys. When we get formation closures on macro time frames, that has a lot of weight to it. Okay, so these types of formations here, specifically in candle formations, they don't have the best strike rate when we're observing them in smaller time frames. But in this case, this is a weekly time frame closure of a bullish engulfing, and you can see here that we're already getting an incline of volume. So this is looking very good. This weekly time frame close is already almost at 10 million in volume, and the prior close was at 5.3 million. Before that was 7.53 million, and before that was 8.82 million. You can already see that from the last 3 consecutive weeks. Let's see this one right here. Yeah. So from the last 3 consecutive weeks, we have had lower volume than what we are presently in right now. That is very much a bullish statement coming out of the CLNV asset. Okay, so now we can move on to, actually, let's see. All right, so I guess I could talk about this too, right? So it's just that this one has about 7 days and 18 hours still to close. This is the bi-weekly, and it is also in the formation of a bullish engulfing too. Oh man, this is absolutely powerful. And I mean, we already talked about this one too. This is the monthly time frame bullish engulfing as well, but this one has 20 days and 18 hours still to close. Okay, team. So everything is looking massively awesome for this asset. And just like before, I did mention that we closed this bi-monthly iteration with a bullish engulfing candle, and this is likely the reason why we would continue to the upside. And you can see here that it has continued, right? So, I mean, if you recall the video, I specifically said that, yeah, we can actually come back down. We can then start another reaccumulation phase and then get the green candle that we needed, right? So, yes, we are in the process of building that confirmation green candle from the bi-monthly massive close. Okay, team, so if we pull this back to, let's see, maybe even the 5-day time frame, I think we can look at it or observe this in even the weekly, but this is the right-angled broadening wedge that we are presently in, right? So this wedge has, very curiously enough, a target that's very much looked out for from the bulls here, from the investors, right? So this has 1838 to 2204. Not saying that that's going to be, you know, the now. I mean, anything can happen, right? Look at these massive candles that this thing has had, right? This candle alone right here, that would be enough to get it to 22 cents, right? And even beyond it, right? So I'm just saying that that the probabilities are absolutely there and definitely could be something to look out for this asset. Another thing that we can look at here, I did point this out. Yeah, I'm not sure if I actually I think I did actually, but this is. Let's go ahead and connect the regression here. But what you are observing. Actually, can I do that? I think it would probably be like this. So yeah. I definitely think it would be more around along the lines of that, right? So yeah, this is an inverse head and shoulders formation, right? So just like this, that is one of the more popular formations, and this is on a 5-day chart. So I mean, remember what I just said, right? The higher strike rates come with formations in the upper time frames. Okay, so this is how you take the price objective. Neckline to the bottom line, to the bottom side of the head, and you apply this trend line to the middle of the right hand shoulder, right? So you can see here the credibility that it's giving us right now. So the price action for this, or the price objective for this formation, is in fact 1735, and the regression from the top side of this formation is 1776. Highly accurate. Okay, so again, I'm not saying that we're going there. I'm just saying that the probabilities are leading towards a massive upside. And with that said, I can safely now move on to the statistical side of the analysis, because what we talked about yesterday, as far as waiting for the signal to fire, well, guess what, ladies and gentlemen? It has fired officially today. And since yesterday was the day that we were observing that potential, that this, you see how it's, let me do this. Okay. This is the pivot point right here. You see how it's notching over to this upside? That makes this the pivotal point. That means that yesterday at open, the signal officially fired. Okay, so now we can take our we can take our measurements here. So the officially fired signal means that we are now officially in an expansion phase beyond the 15th percentile of critical contraction, with an upside pivot on stochastic momentum, and to top it all off, DMI bulls are clearly on the upper hand of the bears, and please notice that the ADX, the average directional index, is sitting at a 29.5% position. What that means is that, well, actually here, what it means is that at, okay, 25%, let's say 25%, right? That's the usual metric to look out for a market trend. And market trend would be whoever is leading the upside. So if bears are leading the upside with strong ADX, that means that the bears are taking control with a strong trend. At this point, DMI plus being the bulls with a strong trend, being above 25% or 25 or above, that means strong market trend. Now, when we're looking at absolute trend, that's actually at 30%, and we're sitting at 29.5 with the bulls on top. With the signal fired off, now officially entering stochastic momentum in the bullish control zone, and expansion happening beyond the 15% of critical contraction. This is very powerful. Okay, so let's just say it like this. The last time this signal fired off, we were suggested a top side of 8 cents coming out of, could it be? Ooh, let's see. Oh no, right over here, right? So this is the point to where we had that upside. Yeah, so coming out of this candle right over here at about 205. Yeah, just at about 205, so 2 cents all the way to 740. Right? To 740, right up there. That was the last time that this signal fired off. And that was dated on, let's see, right down here. That was last month, September 5th. Right? And we are last month. That was a few months ago. So now we're on November 9th, and it looks like this is, it looks like it's ready again, right? Critical contraction here, upside pivot. This is where the signal fired off. This is where the signal fired off, which is very, very similar positioning to where the signal fired off, right? So the last time this fired off, check it out, we were already pivoted towards the upside right in here. And right here, when we're firing off, we're already on an upside pivot too. Man, oh man. Yeah, team, this is looking very, very strong. And the statistical side of the analysis suggested a top side of, guess what? 803. Price action came up to 740. And I am talking about the upper bound of the first standard deviation right up here. 267.352% was the statistical backtest fired off when we were at 205. Guys, what? Come on. Right? So that is what's happening right now. That is presently the signal that has fired. Congratulations to those of you who did catch the entry down here. I can name a few of you by name, so I know this. So congratulations to you. Let's go ahead and now apply these metrics. The first one we want to observe is, of course, the standard deviation metric calculated from the average upside thrust, aka the mean. Okay, so what we're doing here is we're going to take into deeper consideration the 68% of the results landing within the standard distribution curve. Okay, so that means that we can measure that in this manner. Okay, so let's take a measuring tool here, and let's take into consideration when it fired off, which is the beginning of this candle here, yesterday's candle, which is the opening of 480, right? So let's go ahead and apply this 480, starting right there. Let's go up 121.62% to the upside. 121.65, that's fine. That's suggesting 1063, team. That is suggesting a break and a closure of a zero. It is suggesting that we're going to knock down a zero at the 68% of the returns, right? So that is absolutely powerful. Now, if we were to take into consideration the average upside thrust, this is on average what tends to happen with a 90% it is a 91% probability that we get this move here. Okay, so what does that look like? 480. Let's go ahead and move this to 145.73%. Let's see. That's pretty fine. 145.86. 1179 is the target that we're observing here. Okay, so what I'm going to do is I'm actually going to go ahead and add the tags here as price targets, right? So this specific one being right at about 1065, and this one being at about, I think I said, what was it, 11.79, right? There we go. So now we have these two targets to look out for, and the most realistic target to look out for, of course, is going to be the lower bound of the first standard deviation, being 24.11%. So that would be the lower bound right in here, right? So let's go ahead and I'm sorry, right up here. Sorry. Right. So let's go ahead and add that to the probabilities here, and we will continue. Okay. So let's go ahead and move that out of the way and add here from 480, 24.11, I think it was, right? Let's see. So 24.13, that's fine. That is suggesting a topside target of 596. Okay, price action has thus far from the firing of the signal Price action has already touched 560, which, by the way, yesterday we spoke of 558 as our resistance. Man, oh man, is the chart following? Is the price following the chart or not? Right? We already met the absolute upside that we spoke about yesterday to its accuracy. Okay, and of course we got that pullback that we're looking for. All right, now the long-awaited target that everybody wants and everybody wants to see is the upper bound of the first standard deviation being 267%, 267.352%, which is right up in here. Okay, so let's go ahead and add that to the possibilities now. Let's just make sure this thing is at 480. There we go. And this is suggesting a top side, oh man, of about 1767. Now, why does that sound familiar? Well, that's because the moon is up there. I'm just kidding. We've already observed some of those targets, right? So particularly here, we were looking at a target of around 1535 based on another formation, right? And that 1545 or 17 cents that averaged out is actually the top side of this over here. What let's just put it this way: you're looking at the highs of April 2021, right here. So actually March 2021, right? So right up in here. That is what is being suggested by this formation, right? So I definitely like what I'm seeing. It's looking good, but please remember that not always do we get the upper bound of the first, right? So just know that we have to make this move happen little by little. But all of the fundamental catalysts are looking pretty nice, and we definitely have a good CEO in line as well. Okay, so I'm going to go ahead and leave that tag right there. Now you know the upper bound targets that we're looking at based on this statistical move. This is what I did the last time. Okay, this is what I was doing the last time that we had this move, right? So I'm doing it again just to show you how things can work out. All right, team, this was one of the most massive bear traps I've ever seen in my life. Head and shoulders right here, complete fake out, and then price action just continues onwards and upwards. So let's go ahead and move on to the next chart to see what kind of good news we have. Okay, so let's see. Yeah, we're going to use the RSI. Okay, so what we're going to do here is look at the potentials for a downside continuation starting off from the immediate short term. You can see here that the 15-minute time frame is approaching resistance, and it still has not broken out of the SMA 14. That is okay. The reason why I say this is because this can allow the straggling bulls to get in, to get long the asset, right? So go ahead and notice here that the bi-hourly time frame is suggesting a downside continuation even still. But the important part here is that the SMA 14 is located in a very bullish stance. This is the gravitational zone of the bull weakness percentile, and that paired with the SMA 14 means a bounce, right? So this means that, yeah, short-term, very, very, very short-term upside, meaning that we could, let's see, in a shorter time frame. Let me go ahead and open that up. Could potentially look at it from here. Yeah, short-term upside, I'm thinking that we can get right back up to the area of about 537 to about 540 as the natural resistance from today's high and the prior bar high. Resist from there, and then we would come back into this zone here, 489 to 504, so that we can start validating a potential wick of the break of this regression, right? So this is a breakout play from this pennant. We have broken out of this regression right here. It's being suggested that we can maybe pull back, potentially get some entry zones here at 489 to 504, maybe even all the way down here at about 479, which is just slightly less than the 489, and that could be the long zone for this thing to continue onwards and upwards, team. Okay, so not to make things a little more bullish than they seem, but that would be a bull flag, right? So, and I mean, not even to mention that we're already in a macro bull flag in the first place, right? This is one right here. The monthly time frame is also one, right? And not even to mention the weekly time frame right over here. Please notice that bull flag right here, right? So this is looking mighty powerful. Okay, team. So yeah, short term upside, very short term. Get that pullback, load on, and then move onwards and upwards based on literally every time frame after that. 5-day time frame right over here, team, landing in the gravitational zone. And this is absolutely suggesting a continuation to the upside, specifically, specifically getting that hint from the SMA 14. Looking very good. Okay, team? Now you know the targets, you know the resistances, you know the risks. Sorry for the movie, but this is very important as this can literally turn an investor into a millionaire. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well, a very good rest of your night. And I will catch you at the bell, literally mañana. Adios.